especially the China-US as well. But also we feel it's now responsibility and an obligation for us also to facilitate the dialogue as a non-government, trusted, independent platform, that we want to go beyond the news and introduce the thinking of the key policymakers, of the best voices, the best thinkers from China. And we're very lucky to have Professor Zheng Ming joining us today and tell us about the China's economic growth and opening up. So, to quote, before I end, to quote Shuli, the publisher of Caixin, that by hosting these roundtables, Caixin wants to set up a non-governmental platform that we want to build. We want to build a platform for sophistications and nuances with insights and impacts. So my special thanks going to Peterson Institute for hosting this roundtable with us again. And also, last but not least, special thanks to the 9F Group, the global partner of the Caixin Roundtable International Series, represented by Riman Chen, the gentleman sitting there as the MD of 9F International. So without further ado, let me please invite Professor Zhu to come up to the stage, as well as our speakers, so we can get the session started right away. Thank you. Please join me in welcoming Professor Zhu and Fred and Martin to the stage. Yes.
Because you don't want to look at the projector, just do the presentation. Don't wait until the presentation.
Okay, so please take the podium here.
Okay. Good. Well, thank you, Fred. See what? Yeah. Thank you very much for the kind words of introduction from Lixing, and thanks also very much for the invitation from Peterson and from Caixin. It's a great honor for me to be back to this podium, and also it's an honor for me to be paneled with Fred and with Martin. I think this is really a great honor for me. So I will start this session with a very brief sort of my observation about China's economic growth and opening policies, and why these two things link to each other, particularly today. Quite a lot of concerns about China's economic growth in the past few quarters, a year, and whether China will continue to maintain the growth, and also how sustainability about this growth. A lot of discussions, right? Yesterday was interesting because IMF released its updated global forecasting when 70% economy have growth slowing down, and they upgraded Chinese growth rate 0.1%. Okay, 0.1% is a little tiny number, right? But I think that's also very, very important. 6.2 to 6.3% growth is really a big thing. It's not small. It seems to me this 0.1% mean China's growth has been stabilized. I think that's very important. In the past few years, China's economy has been struggling, try to stabilizing the growth, and because of structure change and moving to sort of a more than $10,000 per capita GDP level, structure change, all those challenges. Now, I'm very happy to see this 0.1% and upgrading on the GDP growth. If we're looking for the first quarter for this year, consumption picked up. I think that's also very important, because last year consumption was very weak. A lot of concern why consumption is so weak. So many different reasons: confidence issues and equity markets issues, right? And income level is another issue. There are quite a few issues in there. But we observe in the first quarter consumption picked up, which is very, very good news. Confidence come back, equity markets are good, income also picked up. I think those are all helps. Investment picked up is also important. China had a very strong investment growth rate in 2017, so roughly about 18%, but last year dropped to 5.9%. It's a big drop. And now investment picked up. I think that's also with the private sector, with the SOEs, also with government infrastructure on the railway, on the subway, all those issues. So that's also helps. I think that's good. Trade number is not very positive because the first quarter, so far we observe negative growth rates on the trade, particularly export to the United States is not very positive. Cumulatively, it's negative around 14.8%. We may run into trade deficit this year because China become more open to the global market, tend to import more. But on the consumption, on the investment side, it really works. And its tax cut, 2 trillion, will take place separate on April 1st and May 1st. And we observe the company start to move already. And corporate profit is quite a bit concern for last year, particularly and also for the first 2 months. But now we see the company pick it up now. PMI also go back to 50.5 in March, so which go back to the positive territory, which also good. And the housing market recovered strongly, actually, amazing. And the 30 major cities observed more than 24% sales increase. And the new housing started also has a growth rate 6.9%, so very strong. So with the momentum, I think we observe this year, China will be able to, our model also show 2.2 to 2.3% growth for this year, very much in line with IMF numbers. I think that's also very important. It's important for China, it's also important for the whole world because China continues to contribute more than 30% growth for the global growth rate, right? That's also important. So those are good things. Now, another thing is also good and also interesting. When growth picked up, the debt level did not or haven't picked up. No, I think that's amazing. China still have a very high debt level. Currently, total debt is 248.7%. By international standards, way high, but has been stabilizing. I mean, I think that's also important. At aggregate level, compared with 2017, the aggregate debt level drops 1.7%, which is not easy, I have to say. Big SOE's debt level drops 0.7%. Financial sector deleveraging dramatically, and they debt level and drop roughly 6 to 7% for GDP level now. Overall, and household debts increase a little bit for local governments increase, but balancing to each other, overall debt level remains. So the debt level stabilization is also very important. It's in some way just say the growth model has been shifted and has been changed. It works that way because the growth is no longer fueled and supported majorly by the credit growth. I think that's also very important. But then come to the question whether this growth is sustainable. I think that's also a very important issue. The real challenge anytime we talk about sustainability of growth is China is moving into a service economy, right? Since 2014, China's service sector accounted more than 50%. But the key challenge is like all the other countries went through this process, the service sector productivity is way lower than industry sectors. Today, the industry sector still have a 20% higher productivity level than the service sector. And China will continue to move into the service societies. So that means every 1% increase in the service sector, you lost 20% of 1% for productivities. That means the growth will slow down. So how do you bring up the productivity in service sector become the key, which is the common challenge for the whole world, not only for China. We observe for almost all the countries in this sphere, in this phase, from $8,000 per capita to 15,000 at that time. When service sector picked up, productivity, the growth is slowing down. The growth in the most case, even go back to US, Germany, all the case, the growth was gradually slow down. When service sector picked up, the growth will slow down because of productivity issues. And the growth will slow down until the service sector peaked at the 70, 72, 75, and the growth stabilized at 2.5. Well, China will go along this path. I think That's the real challenge. I mean, given in the 1.3 billion people, given the size of Chinese economy, I think that's a real challenge. Literature and historical experience tell us at least a particular phase to avoid the so-called middle class structure. And internationalization is a key, most important part. So bring in international competitions, particularly in the service sector. Make sure the manufacturer continue to have a productivity increase and the service sector productivity pick it up. So then come to the opening policy now. I think China have no other choice but open the whole economy, particularly the service sector, to the whole world, and bring the productivity up, and then we'll be able to maintain a sustainable growth. I think that's the key challenge. So you will see the last year, China's President Xi Jinping announced the 11 key major issues about financial sector, opening policies, and ownership issues, the market issues, the products issues. After years, and the UBS is in China now, own 51%. So JP Morgan have a security company now. Standard & Poor have a rating company, 100% own. PayPal is moving in, Visas and MasterCards, and all those financial sectors moving. And more, Larry Fink just said that he want to have onshore Chinese operations, and he want to be the major player in mainland China. So I think that's also it's a good improved efficiency in financial sector, increase the competition is very important. But there are more. In fact, we did an international comparison. China's financial sector productivity is not too bad. China today have the largest banking sector, second largest equity market, the third largest the bonds market, fourth largest or third largest insurance company in the world. And the productivity is not bad at all. The real low productivity in China is healthcare, education, and the public administration, all those things. I call the non-market service sectors. So the key issue is we need to open this non-market service sector to the whole world on the broad way. So what we observe in the past 8 to 12 months, China announced several policies to allow the foreign company move into more accountings and the shippings and managements, consultants, and also even with the third-party payments, all those educations and Medicare and hospitals, and broadly open the ownership and areas. The market entries is there, and allow them to do various business. It will take time to see the impact, but as I mentioned, in financial sector, we do observe the changes. I think those will change the Chinese service sector, and will enhance or bring up the productivity of the service sector, will be able to support a sustainable growth in China. I think that's the most important thing. But challenge remains. I mean, the reason why you say we open up, because when we did not open, there are 100 barrels, right, underneath everywhere, right? You suddenly open up, but those 100 barrels are still there. And for example, in financial sector, accounting standards issues, disclosure issues, derivatives in the hedge, and all those things, you need to solve those things one by one. You need to change the regulatory framework. You need to change the market practice. You need to change the capital flow movements management systems. And you need to make RMB more flexible. And you need to allow the hedging products in the market. The same thing happened in the healthcare and insurance company, right? So, and it takes time. It takes time. But I think we are moving into the right direction now. So those give me the confidence to see the futures. So bring those things together, I would say the good news, I would say Chinese growth has been stabilized around 6.2, 6.3 for this year and for next year. Cyclically, the Chinese growth rate has been dropping, from 14% to roughly below around 6, and the last year was a little bit of, backed up to 6.5. And a little bit of a low this year, but we're able to a little bit low, but sort of in the level stabilizing. So that will help China to build a base, move into the high income level category. I think that's also very important. As long as China be able to stabilize the growth in around 6% level for 2 to 3 years, this is the key pivotal years. China were able to move the hurdle of so-called middle income gaps. Because comparison, we did a study, it's very interesting. Compare the two groups of economy. The one group is like Korea and or Taiwan province of China, another Malaysia, Brazil, and other Argentina and Chile and Mexico and a few others. Exactly the difference start as a per capita $10,000. China exactly at that point. So whether China will follow upstream path or downstream path depends on policy. So the open door policy, continue to market-oriented reform is a must for China. And the authority take the position and take the decision, decide to move into that direction, the implementation will follow. In that way, and I think in the next 2 to 3 years, we will see change. So then China will be able to move the hurdle and move into the new areas. I will stop here. I'm very much welcome, appreciate comments or questions later. Thank you very much.
Then I'll welcome Professor Zhu and Fred and Martin. Please take the stage, and we'll have Fred and Martin each make a remark, and then we'll take questions from the floor as well.
You want me to comment from up there?
He's probably more just sitting on the stage.
Then we have to look at
You have a PowerPoint? Yeah. Oh, okay. Then please come here.
a few minutes from now.
Yes.
Slight change. It's a great pleasure, as Mark said, to be cooperating again with our friends from Caixin, and particular pleasure to work again with our great friend and board member, Zhu Min. It's great to see you here and interact with you again. I'll be very brief. I very much share your optimistic outlook about the Chinese economy in the short to medium run. But I'd like to focus the discussion on where you left off, which was talking about the reforms and where they will lead China in the longer run, and whether you can get the continued growth in per capita incomes that you talked about. As you probably know, our colleague Nick Lardy has just written a new book, and others have made the case too, that China has actually moved away from market-oriented reform in the last 5 or 6 years. Nick points to a significant shift in the allocation of resources away from the profitable private enterprises to the very poorly performing state-owned and state-managed enterprises, and suggests that, in fact, that is costing China as much as 2 percentage points a year of economic growth, presumably done in the interest of maintaining political control, party control over the economic process, but at the same time hurting the economic outlook and raising questions about the longer-term prospects. So when we get into the discussion, I'd very much like to ask you, Min, to come back and to comment on that, because I think it is so critical. A second aspect of it is what that change in policy direction in China, if that's correct, means for China's international position. You said, and I totally support that, of course, China has no option but to open. That's, of course, music to our ears. We love to hear that. We want that to be true. But, again, there are some doubts. The current trade debate between China and the United States is premised on China not being open in a number of areas, and indeed tightening up its restrictions in a number of areas. There are doubts in some quarters that China will play a global leadership role if it is moving away from market-oriented reforms itself, and thereby moving away from some of the rules and norms that govern the global economic system. So that's a second question I would pose to you, my good friend, as we go into this discussion and debate today. China is obviously moving into a position of huge international influence and power. You mentioned provides 30% of global growth and has done so since before the global financial crisis, in fact. Now 2 decades of China's leadership, much more than the United States in terms of pushing global economic growth. And so China's influence is huge. It's bigger than the United States already on some metrics, PPP, GDP, world trade levels. I'm doing projections in a book that Mark mentioned, 10, 20, 30 years out. China will be bigger than the United States on virtually any economic metric you can get. And a few decades out, it'll be bigger than the United States and even the whole US alliance system, if that holds together, in light of current onslaughts. If that holds together, China will be bigger than the whole hegemonic coalition, as the political scientists call it. So China clearly will become a dominant economic power. Question: will that translate into global economic leadership in the way that previous dominant economies, the UK in a previous period, the US in earlier, better days and recent decades, would provide? Will China want to do that? Will it be able to do that? On my reading, but this is again a question to you, China has exercised very positive global leadership on a number of occasions, in the Asian financial crisis, in the global financial crisis, in IMF reform, a whole range of areas. But at the same time, as I mentioned, we know that China deviates from global rules and norms in important areas and to a large extent. And if one wanted to be critical, one could say China tries to get the best of both worlds. It benefits from, and knows it benefits from, the open global system, but doesn't always conform to the rules of that system and support that system. So in the current trade debate, which we don't focus on today, I would simply remind everybody that I at least think it's hugely in China's own interests to make some of the structural reforms that are being discussed in that trade debate in order to minimize the backlash against China from the United States and increasingly the European Union and the rest of the world too, which undermines China's own interests given its dependence on the world economy. So China's got a very gut national domestic interest in making those structural reforms to keep the underlying global system open and proceeding. Finally, let me just turn to the topic that's really supposed to be our main focus today, international finance, and we're in the run-up now to the annual meetings of the IMF. One of the areas where China played a very active role 10 years ago, and you, Xu Min, were right in the middle of it, responsible for a lot of it, was some important reforms at the IMF. Changes in the governance system that increased the quotas and voting shares of many of the emerging markets, most notably China, but others as well. Subsequently, you moved the RMB into the basket, the market basket for the special drawing rights. That was an interesting example where China's increasing clout persuaded the rest of the world and the IMF, I won't say to dramatically change the rules, but at least to shade the rules a bit in order to accommodate the rising power of China. An interesting harbinger, perhaps, of things to come down the road. But my question for now, so this is the third question to you, if we have time for all that, is what is China's stance or your own personal views on the IMF and international monetary reform right now? It is time for another review of the quota system and the voting rights. It was supposed to happen, in fact, before now, but the delay in the last one has postponed the whole system. The United States has said it will not support any new increase in IMF quotas, which, if taken at face value, would block the prospects for further changes in governance, further recognition of China's rising role, and increase its stake at the IMF. The US reportedly has said it would increase, or at least continue, the new arrangements to borrow, the lending system that helps augment IMF resources and offset the failure to raise quotas. But that's not a permanent solution. It raises governance questions and has a different impact than the normal approach. So question, China played a big role 10 years ago in pushing IMF reform, increasing its own role, its own stake and responsibilities in the system. Is China wanting to do that again? Will that be a major thrust now? And how do you see that coming out? So, big agenda between the US and China. Trade issues, investment issues, finance issues, governance issues. And it's great to be talking with you about them. Thanks very much.
So thank you, Mark, and thank you, Caixin. If I had to read only one publication in Washington to understand what was going on in China's economy and financial system, I would and do read Caixin. So it's great to be partners with them. So I'm going to be looking and presenting on fintech in China. Oh, looks like my first slide is not on there. And what is uniquely interesting about what's happened in China, this incredible transformation, is how fast it has occurred. When I moved to China in mid-2013, China's financial system was pretty backward and definitely not modernized in many ways. Most people used cash. Debit cards were rare. Credit cards you virtually never ever saw. People had a hard time getting loans. The banks weren't terribly interested in providing services to individuals. But then only 3 years later, China's financial system seemed to have totally changed. You had these super apps, these run by major technology companies that were creating the world's largest money market fund. It was very easy to obtain loans from these online financial companies. China's mobile payments began to lead the world. People stopped bringing their wallets around with them and just began to use their phone. And it seemed like China's this wave of the future. And the way it's been described by the Alibaba CEO is blurs the line between your life and the internet. The model there is these super apps which combine all these financial services that you could get with offline and online services to do something in one app that would probably take you about 12 or 15 apps in the United States to do. Okay. So give just some basic statistics on how big this is. The answer is very large. 1/3 of people in China are invested in this single money market fund run by Alibaba's financial affiliate. Peer-to-peer lending peaked at about 1 trillion renminbi. It didn't reach any even remotely large scale anywhere else in the world. And online payments, both Alipay and WeChat manage about 25 times PayPal's global volume. So just dwarfing every other international company. And more than double the share in China of the population use mobile payments compared to the United States. How did China do it? It wasn't just entrepreneurship, but a lot of it was. So the first is this two-track regulation, which was an explicit government choice to develop fintech very rapidly. And the way that worked was the traditional financial institutions had extremely tough regulation, quantitative restrictions on the kind of lending they could do, and the fintech companies, on the other hand, were pretty much exempted from all of the rules that were normally applied to financial institutions. That benefited them in two ways. One, just the fact that if you're not very well regulated as a financial institution, you can grow pretty big pretty quickly. But secondly, the fact that there was so much restriction on the traditional financial institutions meant there was a much larger potential market that they could serve because there was an undersupply of financial services before. The second was that this lack of development of China's financial system actually helped the Chinese fintech move forward. Because instead of like in US e-commerce companies where they just said, we're going to accept credit cards, the Chinese e-commerce companies had to build their own payment systems and their own ways to do this because nobody had a credit card. You couldn't just do what eBay did. And that forced them, starting around 2002, Tencent created the Qcoin, which I view as the beginning of fintech in China. What's really interesting about this is that 2002 is the same year that China UnionPay was founded. So imagine the United States, how we would use payments if Visa and Facebook would have entered payments in the same year instead of having decades of entrenched both market power and consumer consumer preferences and lock-in. No one's going to give up their card that gives them lots of credit card kickbacks in the United States. That's made it harder for things to develop in the US. But then the question is, do we all want what's happening in China? Do we all want to be using these incredible super apps? And for a lot of people, the answer is yes. But for me, I look at it as a trade-off in three different areas. The first is this trade-off between convenience and privacy. Privacy has become an increasingly hot issue around the world, and that's definitely true in China as well. Because what you find there is that two platforms alone, the Alibaba's platform and Tencent's platform, control virtually all the data of an individual's lives. And in the United States, you also don't necessarily have any more privacy, but that data is split up between a multitude of different institutions that can't all easily combine it together. And there's currently discussions, even from current PBOC officials, about whether or not they want to enforce more privacy that might get in the way of this model. The second is market power. The model in China is large tech companies that are already in many ways monopolistic or oligopolistic in their markets are able to enter finance and become stronger. The question then becomes, if you have these firms that are so dominant in tech also become dominant in finance, will any company that just does finance be able to compete, or will any company that just does tech be able to compete? And will you be able to manage the potential conflicts of interest between these two different domains? It's a big question. And the final is risk versus innovation. China really took a gamble in having this two-track regulatory system. Many of these P2P lending platforms ended up being multi-billion renminbi Ponzi schemes. And so what they did was allow a lot of very risky behavior, some of which turned out to be very unproductive. But the result has been an incredible amount of useful innovation. And other countries will have to make their own decisions about whether or not they want to move fintech as quickly as China. That's going to mean you're going to have Ponzi schemes, you're going to have protests, you're going to have potential problems like if one tube in Hangzhou gets cut, you might lose the part of the payment system, which happened a few years ago with Alipay. So for developed countries like the United States, there's really less reason to want to push fintech forward as rapidly as China has done. And we might say, no, we don't want to relax our investor protection and financial regulation. But for many developing countries and other emerging markets, following China's example could be really productive and beneficial. So that's it. Thank you.
So finally, please take the stage, and let's welcome back Professor Zhu to the stage, as well as Fred. I'm sure there are a lot of questions from the floor, but before we start, maybe Professor Zhu can quickly comment on the three big and very important questions from Fred, and as well comment very briefly on Martin's overview of China's fintech growth, because you are a real expert on fintech as well. So probably start from the bigger questions.
Well, the first of all, the very nice comments, but Fred, I thought you are on my side.
I am, but I want to know where we're
So
going.
we should together to answer the question from audience, right? And you raise three big and also very important issues. The first issue, SOEs. I think the SOE assets increase, statistically, most come from the local government balances, right? But local government balances expanding, they provide certain utilities, the highways, all those things. It's most in the service sector. They could be state-owned, but a lot of us also operated by private sector. We call it PPP in China. So my point is we cannot just see the SOE balance expanding because it's not in the infrastructure. Most of the in the local government. It's a very different type of assets. And they obviously produce the low productivity because they are more service, they are more have utility functions. So they're very different class of assets. I noticed Nick wrote a book, argue this point, but I will say if you get into the details, looking into all the local debts, what type of class of assets they own, they have, the productivity, the operations, you may have a very different picture. I think that's the first issue.
But how about credit allocation? Credit allocation, he argues, has been skewed heavily toward the state-dominated enterprise.
Yeah. But then let me also go back to the current China is carrying on a big SOE reform. The two principles, number one is SOE neutrality. I think that's the principles we're going to adapt. And in fact, there are no clear policies say we have to subsidize SOEs, we have to blah, blah, whatever. But sort of a default implicit guarantee type of things remain, you know that, right? So SOE get a sort of benefits from various aspects. So SOE neutrality, emphasize neutrality is very important. The second issue is the authority opened the door for the mixed ownership structure reform for all the big SOEs. I mean, currently there are roughly only 100 big super SOEs in hands of SASAC, right? But they now open almost all the door for the private sector to move in. For example, Ali and Tencent invest in China. I don't know what
Unicom.
called it. Unicom, right? It's on the holding side. It's not, but most of the Chinese SOEs, not on the holding side, on the operation side, have a joint ventures as all the business with all the private sectors already. So, I mean, it's really difficult to say this is 100% SOEs because the holding is SOEs, right? In terms of the nature of a business, I think we really need to get into details. But when finishes this round reform, I think you will have a very different Chinese pictures about the SOEs. You will see a sort of a French-style SOE type of things back to the 70s and move into that direction. And also regulatory framework policy will change. The banking loan issue is also the issues has a lot of debating discussions. That's true, but also the current you will see in the past, particularly 6 to 9 months, there's a big policy shift to emphasize the credit location to the private sector, to the SMOEs. So it's quite a big campaign try to change. Traditional banking tend to lend money to big companies because it's much easier, right? On China, it's gradually moved up the fintech side, move to the SMEs, which is quite productive now. But the big banks still tend to lend to the big SOEs. And now this is a new policy. If you give another 6 months, if you re-look the data for 2019, I think the data probably will show you a very different pictures. 2019 is a big year for reform. Yeah. For the question for fintech, I mean, Martin gave a very broad overview on China fintech. Fintech move very fast. The good news is they provide so many services. If you only mention in financial sector, right? You're not talking about e-commerce, not everything else, right? Even in the financial sector, SMEs, and customer loans, the credits, and to the rural areas, they really have a very broad coverage of those things. I think which is very positive, it's very good. In Ali, in Ants finance, right? They can accept a loan from SMEs applications in roughly 3 to 4 minutes and issue a credit in roughly 30 to 40 seconds and maintain the NPL level under roughly 1%. You think about the spreads, they can charge you 12 to 16%, right? If you go through the normal banking process, it would take you, say, 3 months, just accept a loan applications. So, I mean, technology really changed the financial sector, I have to say. We did a study, we found every loan credit given SMEs for a traditional commercial bank, the cost is roughly 2,000 RMB. Most of the human cost. For Ali, it's a 2.56 RMB. I mean, this is less than 1%. And 2.56 RMB and 2.1 RMB is the cost for machine. The human cost is almost zero. So it's all run by the machine and artificial intelligence. So I think that's very important. Obviously, privacy is a key concern. Cyber security is a key concern, right? Because those systems are still vulnerable to the attack. At this level, we still don't know. We don't have a clear answer. No one have in the whole world, right? I mean, how this company dealing with the cybersecurity issue, right? I think the world have to work together on those issues. And the private issues, currently we have SGDP from Europe, and we saw various resource diving talk about those issues, but still in the very early stage, we need a global efforts to working together. Now, P2P is a separate, different issue, but P2P is a mixed. It's growth so strong. Some of them are ponds, some of them are not. Realize the risk. Roughly 18 months ago, China started to clean the market. And the P2P numbers really drops from a few thousand to less than 500 now today. Market is much more clear. You hear the news, the run of a P2P today or here or there. I think which is not terribly a bad news, because if it's a pawn system, it's not a good company. It will run into the trouble. Will have a default. Let them go bust, follow the market, whatever the principle is not necessarily bad thing, as long as they don't cause systemic risk. China put a lot of efforts on cleaning up two things, P2P and crypto and currency on the side. The Bitcoin used to have 80%, trading activities centers in China, right? Or roughly 80% production capacity in China, which after roughly 18 months efforts now, its situation is very different. Our risk is much, much lower today. Yeah.
Thank you. Thank you for the quick answer, and a lot to watch in the next coming 6 to 8 months or 1 year, including this round of SOE reform, including the new policies on giving the credit more to the private sector, as well as new fintech policies, especially on P2P. So now I'll put you on one side and start taking questions from the floor.
Try to answer all the questions.
Yes. So please raise your hand and quickly identify yourself, this gentleman and this gentleman.
Sure. Will Martin from IFPRI. Min, over the last 30, 40 years, China's moved an enormous fraction of the workforce out of agriculture, and there's been a lot of productivity gains as people have moved from low productivity agriculture into other sectors. But I'm just wondering, that process is getting towards its end, and the labour force is not growing, declining. 6% per capita in that environment sounds pretty high going forward in the medium term. And I just wonder, what do you think?
Maybe we take 2 questions at the same time.
Hi, this is Raymond from 9F Group, and we are the fintech company in China, and we have been bringing a lot of our Chinese experience and technologies to the Southeast Asia countries and have many implementations there. And we see there is a lot of unprecedented
Don't look at
opportunities.
me, look at
Oh, okay.
Fred.
Yeah.
He gave me his card.
So my question is, for the fintech, we see that they renew the financial infrastructure. They have provide better risk management structure and methods. And so with that, the fintech will help to fuel the growth rate or the productivity you have mentioned on the service sector, because for the fintech is not only working on the financial service sector, because the fintech involve a large ecosystem and also the other sectors in the service industry. For example, for the payment industry, they involve a lot of other, for example, medical or education, the other payment services. So will that through the growth rate or the productivity that you worry about that will not be growing? Yeah, that's my question.
Well, together, let me just give the first to Fred. Obviously, you have
go
a
ahead.
better answer for the things. I mean, the three key policy or drive for productivity growth is when the market-oriented reform. The second is opening up. The third is digitalization, right? I think that's really the three key drive force to support the productivity growth in all particularly in the service sector. With this study, we found it's very interesting. In China, e-commerce productivity is way high. Entertaining sector productivity in China, compared with international peers at more than $10,000 level, is way high. I mean, those are basically because of technologies. And artificial technology will be broadly used in, as you said, education, healthcare, and we observe in the past 18 months, and so many artificial enhanced companies and technologies, and move into the healthcare sectors, from remote, and the monetary systems, the customer recruitings, and account managements, and even remote surgeries, remote consultations, even research and marketing, and really amazing in the healthcare sector now, which is a big. With 5G, without 5G, you cannot do remote surgery, because the delay will cause the bleeding in 1 second. The patient can be died on the operation desk, right? But with 5G, you will see, particularly in the healthcare, I mean, artificial intelligence will move very strong and very fast. In all the education is another case. E-commerce, obviously, in China is much stronger than today in the United States. E-commerce today in China count 26% now. America is only roughly 14%. The way logistic, right? Logistic is a huge market in China. It's a 14 trillion RMB market, and account roughly 15% of Chinese GDP, way higher than the world average, way high. In the US, it's only 8.2, 8.3% of the GDP. So it's a huge room, and you will see the logistic whole sector experiencing a revolutionary change, destructive change. From now, it's really the ideas from factory, go all the way down to the storage, to shipping, until to the consumers. It really changed everything. I'm back to Beijing for 2 years now. In 2 years' time, I did not go to supermarket once. I did not go to shopping mall once. I buy everything online, and everything shipped to my house. Yeah, from 10 cents, 2 bananas, to a massage chair, cost me 10,000 RMB. Everything, refrigerators, you name it, everything, car, everything. You just order online, it's sent to your home, and logistics is such a big area of the market. Manufacturing is another big area. I think this is automation, right? China facing labor shortage now because the aging demographic change issues, and but China have very low robot ratio. You know, China per 10,000 workers, China have only 32 robots. Korea, South Korea have 400 something. It's a huge. So in terms of automation in manufacturing, China's #1 manufacturer in the whole world. It's a huge space, and for Foxconn, I'll give you a real case. Foxconn used to hire 3.5 million people, produce the iPhones. They fired 3 million people. Today they have only 500,000, but they use 5 million robots. And they designed and made all those 5 million robots. Foxconn become the largest robot company now today in the world. It's incredible. And iPhones and the default rate, it used to from 1/100. Today it's less 1/1 million because the automation. Yeah, the quality really improves. I think the whole manufacturing, logistics, and the service and the Medicare, all those areas are going to experience dramatic disruptive innovation process in China. Yeah, it's coming now, and you will see much more faster, stronger change in the next few years. So that's a big thing, and the big things happening in China.
Min, is that going to require, to get that to happen, is it going to require any further policy changes, or will that happen in the current policy framework with no more need for improved environment?
Most of them within the current frameworks. The only is if you just allow the private sector move into the more healthcare and education, all those sectors. We just announced the policy 18 months ago. I think it's a well issue. But real challenge is the privacy issues and cybersecurity issues. I think that those are the data issues. And I think the government have to take responsibility for those issues. And also, you have to think at the beginning, Martin mentioned the monetary power issue. Yeah. Because when the company grows, the winner take all is because you have the technology, right? They grow so fast, so strong.
Well, and also underlying the privacy and monopoly issues are the government's access to those data files.
On the payments issue, China found its own way. Because China have a UnionPay, right? I don't know, Marty, you know that. But in addition to UnionPay, we set up the ring. So we bring all the third party payments company together, become the shareholder with UnionPay to set up a China a third party clearance payment system. So then the central bank have the access to the whole thing, and then you will be able to manage the risk. I think that's the whole thing, which I have to say it's not easy. It takes a quite long time to go through the whole process. But this is a quite new thing for the whole world, right? I mean, whole world don't have this system, and China have to take some action because the third-party payments become so strong, so powerful, right? I mean, and also the pooling cash, it really become enormous big, right? And Alibaba become the largest, as you say, Yuebao, right? Become the largest money market fund now, bigger than JP Morgan's, because all the payments, the money just sitting in there, right?
I think this is a critical point to note. There's this general view in Washington that any Chinese government official can get any data it wants from Chinese companies anytime they want. I think that's absolutely inaccurate.
I don't think
because you talk to people at the PBOC, you talk to people at the NDRC. One of their greatest frustrations is getting companies to actually share data with them that are quite legitimate to be asked for their regulatory responsibilities. And sometimes they have to take drastic action to be able to get that basic part. So these companies are often very powerful and often push back against sharing data with the government.
No, even the company like Tencent, Ali don't have individual in the per se, right? I mean, they have so many data, right? But if you ask them for particular individual information, I don't think they have the capacity to go there. Yeah.
We probably
Did I answer your question in some way?
and probably much more. We'll probably have time to take another 2 questions. So take your opportunities, and Bob and Manxing. Sorry.
I'm Bob Donor from the Atlantic Council. You referred to it in your opening remarks, but one of the most striking things about China over the last 12, 13 years is how rapidly the current account surplus has come down.
Right.
I can think of a couple possible causes: the aging of the population, the rise of real household incomes. But what do you think has been responsible for the drop, and will it continue into the future?
This is a big change. China, I think 2019 can be a pivotal year. China will turn from the current account surplus to the deficit. And China probably can continue run deficit for years. Because the first issue is because demographic change and saving rate drops. Right? I mean, that's the first issue. The second issue is become middle class and really grow up every day. And import increase dramatically, particularly on consumption goods and also not only on the intermediate goods. So I think the current account change is a big issue for China and for the world. It's have a lot of implications. The first issue is, for example, the monetary policy base also changed, right? And before, China, because we have a surrounding systems, every dollar get into China, right? So central bank have to issue equivalents RMB into the market, right? But now you have to have a completely different instruments, right? Situation to provide the liquidity to the market, but you don't have a particular $8 a deem against those whole things. This is quite a big issue. Then when you become the current account deficit, you need the capital flow move in, right? When you need the capital flow move in, you need to do 2 sides of things. So one side of the issue is you have to cut the hurdles and make the money easy to move in, right? But when capital move in, you have to manage it because the money will move out, right? The volatility will be there. With the interconnectivity today, particularly with dollar become more and more dominant global currency, I think the capital movements can be much bigger and faster than any time before, right? So in that sense, on the capital management once again become a very key issue. And at that time, the RMB exchange rate flexibility and also become the key issue because you need a kind of capital account to balance each other. So indeed, you will observe, so I think China will have some key policy change and some parameter change. But also, it will be quite a big change for the whole world. Because if we're looking for today compared with 2008, the global current account imbalance cut more than a half, right? China is typical one from 10% GDP to less than 1 to negative, right? Middle East also continue cutting from a big surplus to much smaller because of oil price, right? But on the deficit side, it's not all clear. For example, US continue to have a 3%. US deficits shrink a little bit of 2009, 2010, but now gradually going that way. In the next few years, continue will be 3 and 3.4%, right? How can we balance those things? And if China don't have surplus, and the Middle East don't have surplus, who will buy this 3-4% US GDP treasury bills? I mean, those are the complete new global situations. So I think you raise the right and important issues, China moving from current account surplus to deficits, but the consequence is enormous both for China, for the whole world. Unfortunately, we don't have very much study, globally. Even Peterson, I think Fed, you should study on those issues. Right?
As for the causes of the change, how about the huge rise of more than 40% in the real exchange rate of the RMB? That had to be a huge factor in bringing the Chinese surplus. The end of manipulation and the sharp rise in the value of the RMB had to have a huge effect in reducing the Chinese surplus. True? No, you don't think?
Not really.
Not really.
Not really. I don't think exchange rate played too much important role in this effect because, at least in the past 5-6 years, China gradually let exchange rates moving along the market, right? More and more along the market.
Yeah.
This is a managed, the floating rate, right?
Right, but
you can.
But the result was a huge appreciation. You don't think that had much impact on the trade flows?
The results application depends on what dollar was on the weakening side. Right after crisis, but now dollar go back to the stronger side, the USD. So you will see the RMB actually RMB in the past few years is quite a stable, right? Last year, a year before, but there before when dollar getting stronger, the RMB getting weak now. So add them together, I don't see that.
Well, my 40% was a calculation of the real effective rate, taking into account what you say, the monolateral.
Real effective.
Yeah.
With that, we probably, I can see Marcos had already started the fire for the fireside chat for the next session. We'll have to wrap up now. And thank you so much. And always like the case chatting with
we 10
Professor
minutes late
Zhu.
already.
Yes.
Bob's here.
Yes. So many topics covered in such a short period of time. And to know more, please continue reading Caixin like Martin does. So thank you. Please join me in thanking all our panelists today, especially Professor. So Marcus.